Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Well, joining us now on the program is Chuck Cumello, President and CEO at Essex Financial Services, to take a closer look at global markets. Let's start off in the United States, Chuck. I wonder if the focus switches back to the Fed. Last week, very much not on the Fed. It was really about earnings and specifically NVIDIA that drove markets to these record highs. This week, do we get back to the macro?
Well, thank you so much for having me. Yeah, listen, I think we're certainly going to see some macro information coming with the Fed and the PCE number that's going to be coming out. That's going to be a key macro number and a big part of the whole inflation story, which again we obviously continue to talk about into 2024. But yeah, I think the entire world practically was waiting for that big NVIDIA number last week. They certainly didn't disappoint, and it obviously gave the markets just a tremendous tailwind.
So we heard from Warren Buffett over the weekend. He doesn't see much in the way of a meaningful opportunity right now. He's sitting on a truckload of cash, I think something over $167 billion in the fourth quarter. Does he have a point? I mean, if you're shopping for value right now, there's not much on the shelf.
Yeah, I mean, well, a couple of things. One, at least he's making probably north of 5% on that big number, so that certainly doesn't hurt Warren and Berkshire. So at least the short rates are very high. So I'm sure he's happy about that. But I think he's certainly right. I mean, there's not a huge compelling buy that is screaming. There certainly are pockets of opportunity, whether it be opportunities in healthcare, a little bit of energy, if you want to be a little bit more adventurous. But there's big parts of the equity market that haven't participated. Healthcare is on the rise, doing better. But even, there's a tremendous amount of the value side of the market, small and mid caps, that have really not participated, and could be a very nice opportunity for an allocation of somebody's investment dollars. Because again, I agree, there's nothing a screaming buy at this point. But I think any pullback with tech is a buying opportunity, and again, small, mid, value all have certainly not had the kind of run that large cap growth has, and especially tech.
He has his own parameters, and they are very, very strict. He's looking for unusually big purchases with unusual value attached to it. Some might say he's missed an opportunity in artificial intelligence, and others might say, well, yeah, but that's not really the area that Warren Buffett would buy in. But he did buy Apple, and I think it's still his largest holding. So is it getting more complicated for the Buffett team?
Well, yeah, I mean, you're 100% correct. I mean, what they're looking for is very different than, what the average investor in the United States is looking for and how they're looking to allocate money. But I think, Warren certainly has missed some of the tech. I mean, he's done unbelievably well in so many different investments he's made. Apple, obviously notwithstanding, but you could argue, and I think he's even said that, had he been a little bit more adventurous on the tech side of things, that certainly would have been certainly a big positive. But, I think the other, gentlemen that are running Berkshire Hathaway at this point bring a whole different view on a lot of these different and new exciting areas of the market, especially around tech and AI. So, who knows what the future holds? But, as we say to individual clients, I mean, technology has been, is, and will continue to be a bigger and bigger part of our lives. And AI has the potential to be a tremendous, generational change, not just for the country, for the world. And, better to be involved in some way, shape, or form with that than sit on the sidelines.
No doubt about that. But when I think of Berkshire, obviously there is the insurance company part of the portfolio. Also a couple of financials, banks. American Express, I think, is still a very large position. And energy, I think he's still building a position in Occidental Petroleum. When you look at the financials, when you look at the energy complex, just those two, are there opportunities here, Chuck?
Yeah, we believe there are. So especially in both areas. I mean, you've seen Financials so far have a pretty good start to the year. And again, in this environment, it took a while for them to sort of get their legs under them with all the obvious challenges they've had. But, we do think there's opportunities in financials. Energy, continues to go, in and out. Right now, it tends to be on the outside of things, but you're seeing a lot of consolidation, a lot of mergers in that space. You're also seeing it in financials with, the big credit card merger last week. So, with energy especially, very low PEs, generally a lot of cash, a lot of good dividend yields. And again, if you don't want to buy tech, quote unquote, because it's too high, and you're looking for an area to get into and to participate, having a certain portion of your portfolio in energy and financials, certainly makes a lot of sense for most investors.
Well, a nice segue to Asia might be that Warren Buffett continued to increase his stake in those trading companies in Japan. I don't think he's doing much in China. But if we can swing the conversation around to Japan, we've had these enormous gains, and yet there are still a lot of people pushing Japan. Others might say, well, Japan's had a good run. Now maybe you should look at China. How does that equation work in Chuck Cumello's head?
Yeah, well, Japan's interesting. I mean, they've finally reached, got back to the old high. It took 8,383 days since December of 1989 to get there. So worth the wait. But I would certainly say, if we're allocating to that part of the world, we're generally tending to be more towards Japan. China has a host of issues. I'm not sure anybody can quite understand exactly what they're going to do. We had the recent rules about institutional investors not being able to buy or sell in the first 30 minutes or hour, beginning or end of the trading day. Some people have said it's uninvestable. I'm not going to go there, but I'll just say there's so many other compelling and wonderful investment opportunities here in the U.S. and around the world that doesn't involve China directly that for the average person that we work with, you're hard pressed to figure a reason why you're going to go there. Quite candidly, I'd rather be in emerging markets in India before I'd want to go to China at this point.
So we were talking about M&A a moment ago. Here we have this deal where Nippon Steel, it wants to take over U.S. Steel. Do you think that deal should be allowed to go through?
Well, I think there's a couple different ways to look at that, right? I mean, one is just the pure financials and economics of it, which probably make a lot of sense. The other part is, U.S. Steel is, a national company with a long storied history, both really, really good in terms of World War II and the storied history of that company, which, an American company being purchased by a Japanese company of that magnitude stokes a lot of nationalism fears, and whether rightly or wrongly, it's going to be tough. And I think on the economics of it, I think it probably makes a ton of sense. I think it probably should get done, given the benefits I think that U.S. Steel, its employees, shareholders, et cetera, would see. But that's going to be something coming out of Washington, D.C., and I gave up a long time ago trying to guess what's going to come out of there.
The other interesting segue that I've got for you this morning, we talked about Buffett maybe not looking so actively in China, but obviously he made a big play on BYD and made a ton of money on that investment more than a decade ago. I note that VinFast, is sort of rising up in Vietnam. But for a company like Essex Financial Services, do you look for those kind of home runs in Asia, something maybe that can play out over the next 10 years, or is that just too big a bet?
Yeah, well, I would certainly say we are investors, not traders. So what we're looking for are the best money managers that can find those opportunities for us, whether it's through separately managed accounts, whether it's through mutual funds or ETFs or whatever it might be. We're looking for the managers that can find those types of companies. We're $3.4 billion organization. We're not, we don't have a team of analysts scouring the globe for the up and coming, electric vehicle manufacturer that, might be in, the second year of its existence. We're looking for the best money managers on behalf of our clients to be able to get that kind of exposure.
Yeah. Okay, out of time, unfortunately, Chuck, but thanks very much for joining us. Chuck Cumello, President and CEO at Essex Financial Services. Joining Joining us now in our studios is Danny Lee, Bloomberg Asia Transport reporter, to take a closer look at this. So, Danny, great to have you on. It's one thing to say that BYD will rival brands like Ferrari and Lamborghini in price. It's another to say in terms of sales and attractiveness. What are we hearing about this early model that might lead us to think that, yeah, they could actually rival Ferrari and Lamborghini?
Yeah, so BYD's push into the luxury segment, they've already got one car out there at the moment, a hybrid, and that has sold around almost 4,000 units in just a couple of months. And when you're selling it for already 1 million yuan, so that's about still a huge chunk of change. That really adds to the top line and the bottom line, and it's all important having these luxury vehicles that they can sell at much higher prices, given what is going on in the broader market in China, the world's biggest auto and EV market. There is a big price war going on.
Yeah, and I think that it's also interesting that this will initially be sold not just in the Chinese market. And I'm looking at the comparison here. If you're saying that this new vehicle were to rival Ferrari and Lamborghini, I don't think that there is a chance, at least under the current situation, that this vehicle ends up in Europe anytime soon.
BYD is laying the groundwork particularly to export its luxury brands. And so we will see more details over the coming several months as they lay the groundwork for that. So clearly putting it out in the China market first, which it knows best, it is able to then just get a feel for what Chinese consumers like about this car, if they need to tweak anything, and just to really set a benchmark, particularly given there is a lot of demand for luxury cars in China. Given the backdrop still of the China economy, there is still that demand in the luxury segment. And whilst volumes are overall small, this is where BYD, by producing domestically and selling domestically, it has an edge, particularly over some of the European luxury brands.
When it comes to BYD, we often talk about how the U.S. market is kind of out of reach because of the 27.5% tariffs. And we often talk about Europe. In fact, we've already done so in this discussion. But I'm curious about, there are a lot of rich people around the world. I'm curious about whether or not, this offers an interesting offer to fairly wealthy people in other parts of the world that maybe are looking for something different.
Ultimately, perhaps, and particularly when it comes to the EV segments, to have a supercar that is as powerful and capable, that can you can actually use for long distances and really use the power. Given the specs of this supercar and BYD developing its own batteries, it's quite confident in its tech and its ability that this supercar has the durability to cope, just like with those gas guzzling fossil fuel supercars, which you can take along the road. People don't want to necessarily transition because with the supercars, you're using a lot of power. So therefore, you need something, EV equivalent, that is, absolutely capable for the needs of the owners who really want to thrash their cars.
So we talk a little bit about the speed that this U9 is capable of. I mean, 100 kilometers per hour in 2.36 seconds, and top speed 309 kilometers per hour. How does the battery function under those conditions? I mean, if you're really pushing this vehicle to its limit, do you draw down on the battery very quickly?
Not necessarily. BYD's batteries, they're very, very, in the market, they're very good, and they are very mature kind of technology. So there's a lot of power under there that you can draw on, and it doesn't draw down the battery or the power in any significant way. It's designed just like any other car, but of course with more power you are obviously you will eventually draw down the battery, but given its technology it's developed over the years, it's really quite a capable unit.
So I did that ant story right before you to get you a little nervous that, oh my God, are they going to ask me about ant? But just to keep you on your toes, I want to keep you on your toes with this one too. So BYD is selling this supercar EV. Let me ask you a question I don't know the answer to. Do Ferrari and Lamborghini have all EV powered sports cars?
clearly they're developing their products as they go. Are they quite there with their technology? That does remain to be seen. But clearly, this is something that all legacy fossil fuel brands are looking at in future. How do they get the best kind of EV technology for their cars? Because again, people just like the feel of fossil fuel cars. They're very, very different, and the sounds that they make.
Yes.
But having been behind some of these electric vehicles, even some of the sporty sedans, my goodness, you step on the accelerator and you're thrown back into your seat. The torque, the ferocity you get immediately from these electric vehicles is quite something.
Danny, just remind us where we are in terms of EV, the tension in the European market right now, and the idea that China could import into Europe right now. I think that the Europeans feel as though Chinese EV makers are trying to dump a lot of inventory on the European market. Is that not problematic for BYD, whether we're talking an entry-level vehicle or even something as sophisticated as this U9?
Well, clearly BYD does make a lot of affordable cars in China, but the context is that when it goes over to Europe, they're not that affordable in respect of the prices. The prices are they're actually quite expensive, relatively speaking, in Europe. So the idea that they're dumping, it's not necessarily a misnomer, but clearly there is a lot of worry in Europe. But actually, the worry extends over to the US, and where you hear the likes of someone like Elon Musk saying that they're quite concerned that if there was no trade barriers, then Chinese EVs and Chinese cars would be all over the world, frankly. There's nothing to stop them apart from barriers right now.
And the 800-pound gorilla in the room would be Tesla. Is Tesla modeling anything similar to this Yangwang U9 in China?
There isn't. Tesla has its very slim lineup. Clearly, its focus is on the Cybertruck, which we have all seen, this hulking beast of unit. But then there's also their affordable car that they're working on at the moment, which is going to come through towards the end of 2025. So there's nothing really on the Tesla front. Is that something that they're interested in? Probably not when you're trying to create volume at scale. So this is probably not necessarily within Tesla's realm. But when it comes to margins, that's all very interesting.
So you mentioned, I think, that this new vehicle I think the company delivered a little more than 3,600 units as of the end of January. Is that right?
Yeah.
Do you think that the overall market in China can support something that is this richly priced at scale? I mean, where you're talking about, really doing enough in sales to justify production?
Yeah, I mean even for the what seems like a low amount of unit sales, the backlog that this Yangwang brand has reported in the previous months is somewhere closer to 30,000 for some of its existing lineup. So with that in mind, when you translate that into real dollars and at least 1 million yuan in pricing, that's pretty good on the bottom line. So there is a demand, even if it's small, but the fact that they're able to generate a much more cash over one of their more affordable EV units, it still makes good sense.
And we have seen from Ralph Lauren and Louis Vuitton that luxury is holding up pretty well in China. This might be a good move by BYD. We'll save that for the next discussion once we see a little bit more in terms of performance. Danny Lee has been with us, Bloomberg Asia Transport reporter.
Well, in South Korea, the widespread walkout by trainee doctors is heading toward its second week. They are protesting the government's plan to boost the number of physicians, but the government doesn't appear to be backing off in any way. Let's take a closer look now with Bloomberg's Jon Herskovitz, Bloomberg East Asia government editor. He joins us from our studios in Tokyo. John, thanks for making time for us. Can you begin by giving me a scope of the doctor shortage in South Korea?
Sure. The overall situation is South Korea has one of the lowest percentage of doctors to population in the developed world. So the government sees this as a problem, especially with the country rapidly aging. It sees the need to get more doctors in more places, and they're planning to increase the number of seats at medical schools by 2,000 from next year. They're currently at about 3,000 a year. So this is what they see as the way that will help get the problem fixed, to put more doctors into the field. And it's going to take some time to do, because this will be first-year medical school students. It's about a 6-year process in school, and then going on to internships and the trainee doctors, the people who are walking off the job now.
You wouldn't think that 2,000 jobs or slots would be such a big deal for a country that has a pretty sizable population. And I think it also brings comments from critics that this is really doctors wanting to protect their levels of income. I suggest, and you probably agree, that it's more complicated than that.
Exactly. And the doctors see this plan as not addressing the fundamental problems. They see difficulties in the workplace, difficulties with malpractice insurance, and also with pay for some of the more difficult specialties like obstetrics, emergency medical care. But in terms of OECD data, South Korean doctors rank among the highest in the world of pay compared to the average wage in the country. So the public really is standing behind the government on this one. A major survey showed about 3/4 of the public support the plan to increase the number of seats at medical schools. It's helped the support rate for the president rebound in recent weeks. So the public is frustrated with waiting times. They want to see doctors. And with this walkout, you're seeing surgeries being canceled. People are being turned away from emergency rooms. Waiting times are getting longer. So the public, which has already sided with the government, is facing more frustration in terms of being able to access the healthcare system.
Well, there's a parliamentary election, I think, is going on in April, so maybe that's part of what's happening. But I'm curious, if you look at the average physician in South Korea, how long do they work? How many years do they clock in for their career before they consider retirement?
I think it would be comparable to other parts of the world. It is a highly developed medical system. They have national health. South Korea has national health care. It's a really when I lived in South Korea, I took part in the healthcare system. It's a really thorough, comprehensive system. And the doctors are comparable to what you would see in other parts of the world, but they are not as many in number as you would find in a place like the U.S.
Yeah, I mean, it's astonishing. Here in Hong Kong, you have both the private and public hospital systems, and the doctors in the public hospital system are terribly overworked. I mean, they're pulling 18-hour shifts, that type of thing. The doctors in the private healthcare system are pretty comfortable, and it's very difficult for the government to get past the lobby to bring more doctors in. They fight tooth and nail to keep the situation as is. I'm curious whether there's any parallel on that in South Korea. Are doctors terribly overworked, particularly in some of the more public hospitals?
Yes, and you'll find incredibly long hours, especially for the trainee doctors. I don't know how that compares to other parts of the world, the working hours compared to Japan or Hong Kong, but there is a lot of strain on doctors, especially early on in their careers. It's a very difficult situation for them to be in, and the government is thinking that if you bring more doctors on board, it will help alleviate some of the strains.
So I mentioned the fact that in April the parliamentary elections will be happening. Can you put this conversation in that context? What do the elections mean for this?
One of the key focuses is going to be this election. Yoon's Conservative People Power Party is trying to regain the majority in parliament. The Progressive Democratic Party and its allies control the majority now, and they traditionally have been much more focused on labor groups, much more of a pro-labor camp. So with this in terms of public polling, seems to show more support for Yoon and the government's position, which could help his party take more seats when the election comes. South Korean presidents serve a single 5-year term. Yoon would, if his party got the majority in parliament for the remaining 3 years in his term, there would be an end to gridlock. He could pass his party could pass policies more business-friendly, taking a tougher line on labor unions. So there's a lot at stake on this. The election will determine how Yoon's remaining 3 years in office will be, and if it'll be gridlock or if he'll get a majority.
And the plan to add another 2,000 slots for medical schools. Yeah, most definitely. John, thank you for making time to chat with us. Jon Herskovitz is Bloomberg East Asia government editor, helping us understand this widespread walkout by doctor trainees in South Korea heading toward its second week. This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.